Yo, what's good? What's good? What's good? Hope y'all are doing well. Today is February 28th, 2024, and we have arrived to the last day of the month. And what can I say? It has been a fantastic, exuberant, exciting month for crypto in general, but especially for Bitcoin and also Ethereum. Now, I've been coming on here for quite some time, basically coming up on almost 100 streams. And there's been one thing that I've been saying this whole time. Learn as much as you can about crypto, because if you put enough time in, some effort in, you will reap the benefit, you will reap the harvest. And nonetheless, that is what is currently going on for all of us who have been listening, paying attention, and especially everybody in the Vault of Crypto. So welcome in. We have a lot to talk about today. It was a huge day for Bitcoin because it just seemed like things just never wanted to stop going up, especially with the first half of the day. I mean, I would check my phone periodically as I'm kind of getting some work done. And before you know it, we're like, okay, 59K. Oh, snap, 60K, 61K. A couple hours later, 62, then 63. We tap 64K. And essentially, that's like 3% away from its all-time high last cycle. Now, the theme of today, what are we talking about? We want to talk about last trip versus this trip. And there's some things that I want to tell you that, look, we may be at very similar price. And so some people that have been paying attention are like, oh, well, we're getting close to all-time high. We're going to go back down. And they're expecting this thing to just be over, right? Let me tell you about how this stuff works. You'd be surprised when we get to all-time highs, especially for an asset that people, really don't mess with just in general. They actually get more interested with higher pricing, as y'all can see. So question I ask, are y'all feeling the FOMO yet? We've been watching this thing essentially go down from these prices in 2021 all the way down to 15K. 15K came around. I'm like, hey, y'all, go ahead, handle biz, right? Go ahead and DCA. Even with Ethereum at $900 back in May or June of 2022. So we've had a field day here on YouTube, and especially in the Vault of Crypto, of just buying all these assets cheap, understanding the way that this cycle works. And the way that this cycle works is inflows come in after these coins have repositioned from higher prices to long-term holders who buy them at lower prices, which that's who we are. And hopefully that's who you are if you want to stick with this whole journey. And so this time around on this journey, what you can experience is a lot of volatility, but the key thing to understand is as long as volatility is going up more than it's ever going down, and during this part of the cycle, that tends to be what happens, you're going to enjoy this journey. So let's talk about it. I appreciate y'all for coming through. I'm going to get straight into it. Like, we're just going to look at this candle that we have for today because Bitcoin is literally showing us a huge, when I say a huge candle. And so let's jump in. So what we can see as of right now, it's pretty dang impressive. I'm not even going to lie. And let me see if I can kind of get this in frame. So we got Bitcoin doing this thing, currently sitting at $61,615. And this thing has been chopping around all day above 60K. But the more exciting thing about this and what makes me extremely grateful to be an investor and just someone who just understands how liquidity and markets go is looking at this monthly close. So one thing that's really nice to see is we have legitimately, today, like this is like the last day, the last trading day of this month in February. And if we look very, very closely, like very, very closely on a monthly close, Bitcoin is going to close higher than we ever have, right? Like we are in strong contention of doing that, especially if we hover around that 62K. So what does this mean? I talked about this on the last stream. We have a full candle body here. Typically when we have full candle bodies, and so I circled all the full candle bodies, like, these candles where we don't have any wicks at the top, this generally means we have continuation to the upside. It could happen where we turn around, but it is very rare. And then so with that being said, the liquidity is coming in, and we talked about how the ETFs are playing a big role with that, where there's been an influx of capital essentially coming from Wall Street saying, hey, we want to get access to this asset class. They've been behind the gate for extremely long time, and they've got them, like, you got to understand, hey, where's all the money at? The money is with these institutions, these larger players. And so with that being said, hey, the retail had an opportunity, like, you know, us everyday people, we had an opportunity to front run these guys by years, in fact, you know. And so, you know, this is a beautiful thing to see this stuff come to fruition, because this is the largest candle that we've had this cycle for Bitcoin. Now, we also seen some other things going off. We've seen Pepe going off like 50% a day. My favorite meme coin, and I always talked about it, I really don't invest in meme coins, but I was like, you know what, this cycle, I am going to participate. So my favorite meme coin, because it's on the hottest blockchain as of right now, based upon the daily users and active users, we have Dog Whiff Hat. Whiff. Woof, woof. And so that was up like 60% in one day. And guess what, y'all? We are just getting started. This stuff ain't going to stop, right? We may have some cool down, but and when I mean it's not going to stop, I'm talking about over the long duration. So over the next 6 months, year and a half, we're going to be going up at an increasingly faster pace. And the altcoins are next. We talked about that capital rotation and how that works essentially in the last stream, how Bitcoin normally gets most of the liquidity. And we're talking about, in general, tens of billions of dollars being added into the market of fresh capital that rotates to Ethereum. Once it rotates to Ethereum, it's going to then make its way into all the altcoins via stable coins or through Ethereum. And so this is a beautiful thing to see. Bitcoin just doing what us here in the Volts of Crypto knew was going to do this whole time. And so this is just the game. Understand the game. I did a stream like almost, I feel like a year and some change ago, about understand if you guys want to understand the mindset that it takes to be a good investor, and not just within crypto, but just with everything, type in Swerve the Dip and type in understanding the game. It's like a 3-hour audio video, because I wasn't even on the screen. 3 hours of conceptualizing how to think as an investor. Literally, that one stream could probably change your whole scenario when it comes to you trying to learn how to invest. So I would highly recommend that video, understanding the game. You got to learn it. So with that being said, things are rocking and rolling. Now, as we are kind of trekking how this time may be different than last time, and I'm not talking about like, hey, this time certain things aren't going to happen or are going to happen. I just want to talk about what the data says. According to where price is today versus where it was this time, or I guess you can say last time when the price was similar price, what were some of the metrics showing us? And so we're going to look at a lot of on-chain data today, as we have been recently, because I want to introduce you guys to how do we value crypto? How do we value where things are currently at? It's like, that's the biggest question I get asked all the time. It's like, hey, where are we at? And then the next biggest question is, hey, is it a good time to buy? And I always say, hey, if you plan on being an investor for a long time, the sooner that you start, the better. But the more advantageous time is obviously when the prices are lower. And so that's what I've been saying essentially for the last 2 years almost, of like, hey, we've got some great opportunities. Go ahead, as you're learning, start chipping away at your portfolio, grow your portfolio. So now, you know, your portfolio is going to be nice, so we don't have to FOMO. So now another sentiment read, right, is once you start having everybody and your mom and everybody that you might have mentioned crypto to in the past, they're going to be calling you back and say, hey, what was that one coin? Hey, how do I use my Coinbase again? What do I do? Like, you're going to get all these questions. And then the more that you get that, the more that you know that retail is back. That's how you know this cycle is dwindling down. Because as y'all can already see, we've already trekked up, and we've already, I mean, you know, look at this. We've done a full retracement of the bear market. Like, and it's, I'm glad that I can finally say that. We have done a full retracement from these bear market lows back to highs. And so what does that mean? So to put it in easy layman's terms, basically that full move that was the bear market that everybody hated in 2022 and some of 2023, we basically just said, oh, nope, we're back. We're back. And that was the name of the stream. Are we back really? Are we back yet? And technically we can say, like, from a technical standpoint, yes, we are back. We have done a full round trip, one all the way down to the bear market, back to one, which is 100% retracement. So from here, things get exciting, very exciting, because retail ain't even here yet. And I'm going to show y'all why. Things get very exciting because once we start to break past all-time highs, things tend to even be more rapid. Now, we are very early. It seems like we're pumping a lot earlier than what we normally would, especially before the halving. So let's talk about why this correlates with some other metrics, not just based upon halvings, because if you guys want to look at it and think about it, based upon from all-time highs from each cycle, we're actually right on cue with the ramping up of price. And the halving is, another factor, but price is always going to be first dominant in terms of how people are going to operate within an asset or even view an asset. For example, green candles are going to make believers out of everybody. Even if they don't even know or care about crypto, they're going to be a believer if they can make some money solely because they've seen a green candle or sentiment that comes from green candles. And that sentiment is happiness, joy, friend telling a friend, hey, let's go make some money, blah, 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 whatever. So, typically, things like to accelerate past the all-time high. A couple levels, right? A couple levels to keep in mind. A couple levels to keep in mind. A couple Fib levels. And there's many things to look at, not just Fibonacci levels, but I'm going to do it right here today. Okay? And then so y'all watching, y'all going to be able to say, okay, Swerve told me, like, okay, let me just kind of look around first and see what do you have to do for your portfolio at these levels. And it's going to be different for everybody. So first level you got to start paying attention to, 90K. This is just before, I would say, about 10% before we get to 100K. And generally, when we have big round numbers on the news, right, 100K is, just about right there. So 100K. Right, you're gonna get a lot of people, a lot of news outlets, a lot of everybody's like, oh, we're almost to 100K, because it's not always just after the fact that we get to eclipse a certain level in price. It's always right when we're about to get to it. Like when Doge was just about to get to $1 at like 80 something cents, it's like boom, Elon goes on Saturday Night Live and it starts this bear market. And so keep in mind for your portfolio and wherever you may be with all your altcoins, they may only be up 5x or 10x or 20x, wherever it may be. But keep in mind, that is a level to pay attention to. The next one is going to be this next Fibonacci level at 2.6. And that's like 2.6 times the all-time high. And so from a magnitude higher, basically. And what we're looking at is a nice level of just about 130K, give or take. So Fibonacci levels like to get hit, and there likes to be some resistance in the rotation of how assets move to the upside. So just keep that in mind. Try to write it down or memorize it. 90K, let me look to my left, let me look to my right. 130K, let me look to my left, let me look to my right. Am I getting too excited? Are you trying to FOMO in later at these times? The idea should be to not to do that and to get all of your stuff in before Bitcoin really eclipses this and breaks past this. That means all your altcoins. And so with that being said, let's trend over and talk about those altcoins. So the way that we can do that is we'll look at the total 3. So this is going to be the total market cap of every other coin in crypto outside of Bitcoin and Ethereum. Total 3. And I've talked about this for a long time too. So let's rehash this conversation. Football terms, okay? So y'all who watch sports or whatever the case is, this thing called onsides and offsides. Basically, onsides is saying, hey, I'm going to invest into my alts that I like simply because they're at a low risk market cap, or I guess you can say a low risk premium, where basically the volatility to the downside seems to not be happening as much as volatility to the upside, because we can see the trend. And trends like to remain until they're broken. So as of right now, we see a strong trend. Now, we had a point in time when I'm saying, hey, stuff is just not super cheap once we get above 540 billion or 550 billion. We've eclipsed that. We are now approaching just about 600 billion on the market cap for all the alts. And the thing is, once we eclipse about 640 billion, the next level to ask yourself is, hey, this should be like, okay, it's not the best time for alts. It's not the worst time either. It's a okay to decent time once we get, to these higher levels. And so that next level, what I'm talking about is about just under 800 billion. And so that's really just another push of about 30% from where the total market cap for all the alts are currently. So that's like that. Hey, it's not the worst time. It ain't the best time. The best time would have been look, The best time would have been all of this time since June and July of 2022 up until November 2023. That would have been the best time for all your altcoins. We entered into the good time, and then now we're just going into like that okay time in between 600 and 800 billion. Now, once we get above 800 billion, that takes us really close to the all-time high, where for the altcoins, the all-time high in market cap in particular was just about 1 trillion. This is like if you're like just late to the party and you're still trying to do a little something, sure, have at it. But understand the risk is going to be a little bit higher, and the gains just ain't going to hit like how they did when the prices and the market caps were lower. They're going to be okay, decent for a new investor, but they're just not yet but don't expect a 100x or a 50x at this point. It's not, the numbers don't work in your favor. But here's the thing. After that, after we eclipse $1 trillion for the total market cap for all the altcoins, you are now offsides if you are investing in crypto. And this is like a huge red alert. Let me actually, because I want to clip this later, so I'm going to take myself off, right? So we can see this. If you are investing into any altcoin after total 3 has gone above $1.1 trillion, you are offsides. You are making a huge mistake. And so what does that mean? It's because we are going past the previous all-time high for altcoins. Stuff is no longer cheap at that point. You are what we call exit liquidity, basically saying, hey, the people who have been waiting down here and accumulating, we're waiting for all of y'all late people who probably aren't watching this stream, but y'all may get into the crypto market, who knows, a year from now, whatever the case may be. And y'all tell y'all family, because I'm saying this because I'm trying to prevent risk and trying to prevent bad experiences in crypto for people, where I'm explaining the reason why you're offsides is because there's way too many people who are now in significant profit, that now you entering into the market share of money or pool of investors, you are now late in the queue, and essentially you're buying their coins at a much higher premium than what they got it. And so you're offsides if you're investing into any altcoins. And I am standing very firm on this. Hear me. I'm standing extremely firm because I'm trying to corroborate my claim of saying this is where you find yourself having a very bad experience if you're buying altcoins and trying to put boatloads of money. Now, if you're just playing around, a couple $100 here and there, okay, to each his own, play around. But if you're serious and say, hey, I really want to preserve this capital, I want to be a good steward of my capital, playing around with altcoins is going to be at its highest risk level once we break past its previous all-time high for total 3. And so with that being said, what does that mean? Because even this point here, right? And like I said, if you want to get the big gains, it's cool to get a 5x or 10x, but if you want to get the big gains from altcoins, that looks like 15, 20, 50x, 80x. Shiba Inu does hundreds of x. Hex does hundreds of x for a lot of people. I'm talking about not just a few, but Hex did hundreds of x. Hundreds of x, not just one, not just 100x, but 200x for a good cohort of people. We're talking about 10 to 20 or 30,000 people. So with that being said, this stuff is all about positioning. And if you're in position, you can reap the rewards. Going back to what I was saying. So previously in 2017, the previous all-time high for the altcoin market cap was just around 360 billion. And then, so what did? We did essentially, close to a 3x multiple of that. Which I'm not saying that exact same thing is going to happen this cycle. It might just be a 2x multiple. It could be. And I'm going to get some of these comments here in a bit. But what I'm saying is waiting is never, even in life. The reason why people wait so much because sometimes they just don't have the confidence, or they have the fear so they don't make the movement. But one thing in life that I know to be true, the people that don't let fear encumber their thoughts on doing what they would like to do, and they feel hey, may be a good option for their life, what happens is they spend so much time worrying and waiting and not doing that life is passing them by. And unfortunately, they begin to feel the brunt of that stress. And life is never going to stop. These dollars are going to keep getting printed. People are going to continue to not get paid as much. Life on the outside of the digital space, as far as like as we know it in the physical, is never going to get easier. And so understand the things that have the availability to give you that chance to make that life easier. And so the more that you can understand about the digital space within assets, because stocks have been digital, like you can't go and just let me go into McDonald's and say, hey, I want to buy one stock from you and get a piece of paper. Everything has been digital for a very long time. So come on board, y'all. Like, come on board and understand this is how it's going to be. So with that being said, we passed this all-time high. We did a 3x multiple. And typically, if we go look at any altcoin, like, things that have already been ripping around, like February is like when things have already in 2021 through, essentially November, things by that point had already did their 15 to 20x. And like people are cashing in now during this time, right? Like I remember seeing Phantom literally go from not even, much of a penny or two, 3-4 cents. And eclipsing what $2, $3, $4, close to $4. So this is where you get your 100x and your 200x, simply because that's just the way the game works, y'all. So what I'm saying is be on sides, basically. Best, good, okay range, just don't do it range, if that makes sense. So we talked about the altcoin. So I want to kind of talk about like this trip versus last trip really quick. Let me scroll through and see what we got in the chat. So I would be so happy with a 5 to 10x, and I'm sure you are, right? But I'm assuming also with that statement, you've already been investing for quite some time. I know that because I've seen you in the chat for quite some time. So in general, yeah, you probably got a decent amount of your money in it. But what happens is people are going to want that 5x and that 10x, right? But they're going to put a little money at first. They're going to start to get that 3x off that little money, or that 4x or that 5x. And then they're going to try to put in like another big batch of money. I know people will go take loans, go mortgage their house, go do all this stuff simply because they're trying to extract every bit of value from the market, but it's at the wrong time. You want to do that when prices are much lower, put the lot of bit of money, or, the lots of liquidity that you have, you want to try to throw it then, not as prices are higher than what your first initial cost basis is. So it's trying to like shift that mindset. But yeah, 5x and 10x for anybody on any amount is great for sure. What else we got here? Yes, but and exactly, like if we can, because, and I explained last cycle, or not last cycle, I explained last stream, the difference between someone only getting like a 10x and somebody getting a 50x in crypto can literally just be taking that action 2 months sooner. Like it's all over the charts. Like, for example, the people that, only wanted to operate after they've seen these large green candles got a drastically different outcome from the people down here, for example, So, for example, if you just wanted to wait till after the all-time high of the altcoin market cap, okay, cool. You could have got your 214, average return from that point. But that's way different from this person that was kind of DCAing just little by little, all through here, little by little, or a lot, because they understand what type of regime and what type of time period that we're in. This is crypto winter. And then so instead of getting that 2x, now we talk the difference. Now you're locking in that 24x, give or take, for example. So 10 times better solution is buying when the prices are lower. And so it's, if we're doing like a comparison, like you see this basin, and I know I got a lot of squares and rectangles, so let's kind of clear that up. So for example, you see this accumulation range. That's what it looks like when prices going to the side, more it's going up. You have an accumulation range, then you break out. So we had a very tight accumulation range, and then we broke out. So we're on month number 3 of the breakout. So like in correlation to something of the last cycle, where we at currently, we are, I'd say we're in relative terms at like this level, give or take, somewhere in here, just like, breaking out, going into something that seems to be a little more parabolic. But one of the main factors to that is if these ETF inflows continue. As of right now, we've seen days of 400 million net coming to the positive side for Bitcoin, and everything is going to track with it. So we've seen a big day for Ethereum. So Ethereum is having its largest candle, and and I haven't moved any of this stuff since the last time that we talked about Ethereum. Where hold up, let me do that. So last time we talked about Ethereum is talking about how we are in this wedge and we're breaking out. So this whole month has been a huge breakout candle. And similar to like this last cycle here, there was a big breakout candle. And typically that's the exciting part of where we start to get going. And then you make your way towards your all-time high, and then you exceed your all-time high to a certain degree. So we're making our way to this all-time high, and we're going to find out where we find ourselves this time next year. So, things are incredibly bullish for those who are new or trying to learn. Bitcoin is the #1 market cap coin in all of crypto. Ethereum is number 2. They are the safest. They will both get you many, many gains. Ethereum will probably get you a little bit more gains at this point in the cycle. For example, from the low to the high, Ethereum did just about like a 54x. So that's 5,465x as of right now from the low. So from the low of where it was, where we were eating it, just getting a lot of good Ethereum at a good price at about $900 to where it's currently at. It's up about 250% in a span of almost 2 years coming up. Not bad. And 2 years will be in about like 4 more months. So I am going to venture to say that we're going to probably be close to that all-time high within that time frame. And that'll be after the halving. And so, and expect to a degree to go somewhat above this all-time high. To which degree, I don't know. We'll find out. But, people who are DCAing this whole time, these are the people that can lock in that 8 to, 10x or whatever it may be for Ethereum as we get past this all-time high, give or take. So, yeah, things are looking pretty dang good. Now, let's discuss what's different between this time and last time. So we'll go here like the basics. Right here we have Google. Let me explain why this is important. I know I've seen some people kind of show this, but I really feel like most people don't do a good job of explaining why this is important, but I'll try my best. So Google, think about the average person. And because this is going to be one of the biggest sentiment readers for, hey, are retail investors in the market or caring about a market or not? In general, you got to think institutions, they have opportunities in software and technology to be able to get access to different data. And they don't need Google to figure that out. They have different platforms, softwares, XYZ. The average person, the first thing that they're going to do is go to Google to learn many things. They're going to say, okay, hey, my web browser, if they have a Gmail or if they just are on the web on their phone, whatever the case may be on their mobile device, first thing they're going to do is go to Google and say, hey, Bitcoin, what is this? Or when's a good time to buy? Or what other crypto, blah, blah, blah. But Bitcoin's a good proxy to look at. So Bitcoin in particular spikes up tremendously when the retail investors have the most interest. Now, if you remember those highs that I talked about here in 2017, December 2017, that was the peak. That was the high where Bitcoin got to essentially, we're talking 20K, but it came from, severely low prices. What was it, a few $100? And it ramps up to 20K in a span of, 3.5 years, give or take. Then you have your bear market. It goes back down to 3,000. So that's November of 2018. And as you can see, nobody cares about it anymore. So essentially, the Google search trends ain't there. We have this time. So this is the summer of 2019 when people thought like, oh, snap, we're about to eclipse that all-time high again. And then we didn't quite do that. Why? Because the Fed started to take up the interest rates. And many other things within the economic frame were looking pretty bleak during that time. There was a little bit of a credit crunch, but we got through it. We dipped down. We had our COVID moment in March, but still there was no interest. But all this time while Bitcoin had no interest on Google, especially in April 2022, May, June, July, it had already started going back up toward its all-time high, right? In December of 2020, and so we're kind of doing a little history lesson, that's when it's eclipses all-time high. But what do you see? You see the interest go from 9 to about 27. So basically a 3 times multiple saying, hey, 3 times more people or 3 times the amount of people here in the United States, right? Because that's what we're looking at, are interested in Bitcoin. And we can look at the whole world here in a second, possibly. Like we might be able to get, that worldwide metric. But we'll look at US first because a lot of what drives the retail cycle are the US investors. But then what do we find ourselves? We find ourselves at a point in time when we hit that next peak. So like I talked about, when all those altcoins are ripping and running in February of 2021, February, March, April, all that good stuff. Some of them going into May and June and a little bit further. So what do we find? That we have a large spike going from, like we said, 9 to about 55. So about 5 times more people are interested. And then we have that slow descent, and then the bear market follows to that time. So here's the key, and here's where the alpha is. We are currently only at 18, not even half of where we were in 2021. But the price is at the same price as it was in early 2021. The same exact price. It was in like the low 60s, same time. So we're talking 3 years later, we have half the amount of people in retail that are interested, but the price is at the same price. So what does that mean? Guess what? Price has more impetus to go higher than where we're currently at, simply because the interest on a broader scale still isn't here yet. So that's an incredibly bullish factor to think about and to know. So now if we look at this on the worldwide frame, let's see, what does this look like? And we'll probably see more of the same, where we have these peaks of interest worldwide, and these are all peaks in the market. But as you can see, we ain't even started yet. Like, we're at 28, and this thing has touched, 71, 70. So if you want to use this as a sentiment, almost like, and not saying that we'll come up to these exact numbers, 70s. We may not. We may go higher, like this mania cycle in 2017 where we got to 100. I don't know. That would be pretty crazy. I mean, Bitcoin, I shoot, man. I don't even want to say where it'll be if we get up to 100. Like, that's going to be crazy. But I mean, what we can basically extract from this basic information is, if this is at 30 and this is at 70, we are barely, maybe only a half of the way there. And then and price doesn't always correlate with something like this. But if that's the case, then 120K Bitcoin is in the bag, basically, if not a little bit more. So, extract that data and use that to your advantage to let you know, hey, where are you at in the queue? Are you late? And the answer is no. You're probably somewhere in the middle, because essentially we haven't had this big spike yet. And so there's room for opportunity in the middle too as well. Outside of that, there's other things to think about. Let's see what else we got. Let's see. Let's go 100%. You already know we coming in with it. So now I think the data and on-chain data is going to be a huge thing to understand and pay attention to this cycle, because it's going to strip your emotions out of your investing, and you can just say, hey, what is in front of me, and when do I see the market getting overheated? Typically, those are going to be times when you want to potentially take some profit. But same thing, I want to talk about last time we were here at this price versus this time. So as I was talking about before, and let me see if I can kind of work this a little bit. We're going to look at the Bitcoin price performance since the cycle all-time high and compare to previous cycles. So we'll zoom in. And the thing that we can take from this piece of information is how Bitcoin likes to travel, the trajectory, the movements, the volatility during certain times. It's very cyclical in nature. So cyclicality means it repeats in similar fashion. So we find that from the all-time high, it's going to go on this bear market that lasts for about a year. It has that sideways accumulation. And let me go ahead and take off the Genesis cycle from 2011, 2013, simply because that's when Bitcoin was extremely volatile and brand spanking new to the market. So it's not going to have useful data because it's a very new sporadic asset. But then as it matures, as you can see, it's very similar. So one thing that we're able to see is, and this is despite checking any halvening or anything like that. One thing that we tend to see, this is the time, like if y'all, where we at, we are currently the white line in this cycle. The previous cycle is in blue from 2017, 2021, and 2013, 2017, that's in red. So that was like that mania cycle, and that's why you see like that extreme ramp up even towards like the last 4 or 5 months. But if we kind of match them up in correlation from their all-time highs and look at just movement, what can we extract? And let's just look at this period of time. So we are in that time where we see that sideways action, but then, and we're ahead of schedule, like compared to the last 2 cycles, we are ahead of schedule, but the trajectory is very similar because here in blue, that's the last cycle. That was that push off of COVID, like basically saying, all right, let's get ready to go off of COVID, right? The ETFs were the big catalyst for this cycle. In 2016 and 17, essentially, this was like that whole IPOs. Hey, go ahead and get this pre-sale. Go ahead and buy this coin before it hits the market. Everybody's like, oh, well, let me go ahead and do that. And so the interest got kicked up here. But the trajectory is right on cue, as this is where we're no longer flat. We're starting to have some type of elevation in the price movement. And then what do we find? We've seen that, and the only thing that is a little bit different is this one in 2017 was very gradual in growth. And then it had that sporadic excitement at the very late stage. This one had the excitement very early on, waned off, and then reintroduced that excitement, but then stalled out, didn't make a new high. We're going to find out what this looks like. We have a lot of excitement, but we're going to see if we kind of wane off, or we just kind of keep going, because the biggest catalyst that's different than all these other two cycles is we now have people within traditional finance, hedge funds, sovereign wealth funds, investment firms, all of these big money players, wealth managers. They now say, hey, all their clients that hold billions and billions and literally hundreds of billions of dollars, they say, hey, the world that we live in, it may require you to add a little bit more risk to your portfolio. If you put 1% of your portfolio into something that might be a little bit higher risk, that gives you very low risk, because 99% of your portfolio is still in the stuff that you consider to be safe or moderate. But what this does is gives you outsized return capability, simply because it's going to be more volatile to the upside than everything else in the portfolio. So they have that, and they're offering it to their clients. And the thing is, their clients know it, and they're asking for it. And so Fidelity, BlackRock, their clients are loving life, because they finally can start to really, really maintain their wealth and feel comfortable about it with very low risk premium, because only a small portion of their portfolio. And so this is just letting us know how much money is actually even in the world to even come into crypto. And we're going to talk about some of those numbers here in a bit. But looking at trajectory, we're, right where we need to be. This is when we tend to lift off to a certain degree. And this lift off is looking pretty dang nice. Outside of that, let me see if I can kind of canvas around and show you guys just a little bit more information where we say, hey, this time versus last cycle, right? So let's track back, and we can look at many things here. Let me see. I want to look at this in particular. So let's pop this up. Okay. So this in particular, which I really like to make sure that we are constantly keeping an eye on this, is looking at the realized cap. So the realized cap is basically the cost basis of everyone who has bought in Bitcoin, and it's going to take down the time and the price of where they had that transaction and say, hey, here's where the whole system is net in capital flows. There's time periods where the capital flows are going up, like how we've seen in bull markets here. There's time periods where the capital position is going down on a net relative basis, like these bear markets here and then here on an overarching thing. Like overall, that's what we're seeing on a weekly and monthly basis. So what's different between this cycle and last cycle? We had a net capital change where, at these same prices, we're legitimately seeing and this is no play. This is no play on a net capital change on a 30-day inflow. We're literally seeing $61 billion being added into the market during this time. So there's a lot of money trying to be shoved in. And as you can see, each cycle, there's more and more money that's trying to be shoved into the asset. Why? Because more money has been created during this time. So every 4 years, there's just more money in the system that can even go into crypto or into everything for that matter. That's why prices are always going to be higher, y'all. So with that being said, we've seen about 30 billion in 2017 at that peak. We've seen about 60 billion on a 30-day net capital change. Last cycle, will we add another 30 to that? So will we see 90 billion at the peak? I don't know. We're going to find out. But the big difference is, like I'm saying, is here. We have legitimately nowhere near that. As of today, we have a very, very small amount of net capital inflows on a 30-day basis. We're talking about 28 billion. So this is nowhere near where this is at the peak, but yet we're at the same price. So like I said, there's much more room for growth, because typically we're going to outpace and even have more capital flows, especially towards the all-time high that we will see. And that is just kind of how this thing goes. So that's very exciting to see. Now, another thing that we can look at, and this one has a lot of lines, and you're just like, what is all this? Like, come on now, you're trying to lose me in the weeds. I'll make this very simple. There's periods of time where people that have been holding Bitcoin for a long time start to get in severe profit. And also people that have been holding Bitcoin for a little bit of time start to get in severe profit. Those are going to show up as euphoria levels in orange and in red. Basically, with that being said, the short-term holders and long-term holders essentially are not quite, where they have been in previous tops. Essentially, so look at it like this. The short-term holders, just about 20% of them are at a net, I would say a net unrealized profit, basically saying net, they're up just about 1/5. With that being said, just about 60% of the long-term holders are in a net profit. Okay, that's pretty dang good. Well, when we see the all-time highs, what does that mean? When we see the all-time highs, we see a number closer to like 90 to 93% of the net or the long-term holders being a net profit. So like I said, we're essentially like 60% of the way or like 50% of the way to where we're going. That's a good thing to see. And same thing for the short-term holders. They're just barely kind of touching profit. But what we see is when both of those cohorts of people or investors start to get in some nice profit, we see these, these vertical bars start to flash off. And like I said, and so the reason why it's not flashing off because of that position change, right? We had this capitulation of the bear market. These blue bars are like when, hey, everybody is net at a loss. That's when you buy, essentially. Pretty easy to see. Same thing every cycle. This is where these lows are. People ask, hey, how do you know when to buy? Well, I have the data. And then the question is, how do you know when to sell? Well, guess what? We have the data. So when we start to see consecutive time periods where we see orange flashing, but especially when we start to see red flashing means a good amount of the short-term holders and the long-term holders are in maximum euphoria, where like 2/3 of both those cohorts are both in profit significantly. And we'll see that red flashing. We're at the same price that we were last cycle, and we don't have not a near orange or red flash. So what does that mean? More upside to go. You're welcome. Don't think about taking profits now because guess what? We just getting started. So I could really end the stream there, and that's it. But we're going to keep going. A few more things. Okay, let's talk about hold on. Before we go to the ETF inflows, let me show you guys this. Another thing. So mvrv, this is going to take standard deviations of that realized price like I talked about and say, hey, where do we max out? So one thing that's very interesting is just like only 1,205 out of the 490 or 4,967 trading days that Bitcoin has ever had, have we recorded an mvrv higher than we are currently. So about 25% of the time have we been more bullish than what we are currently at. That's what that is saying. So as y'all can see in relevant times, like we've had time periods where, we are much higher. We have a valuation of 2.14, but there's been time periods where we've made it up to 3 or made it up to, 4 and some change. And every single cycle, this is getting lower and lower. So, with that being said, I'm not guaranteeing, or no one can guarantee that we'll go to these same levels, but to say, hey, once again, we're at the same price, but at a much lower metric level for tracking mvrv. And then so this is just looking at, once again, the cost basis for many of the people holding Bitcoin, if not all the people holding Bitcoin. You can't track everybody because not everybody uses an exchange, especially with the OTC desk. But we're able to kind of see, okay, cool. Like we still have some room for growth because we're not at these extreme values on these ratios. So good thing to monitor and take a look at. And so, and I've got the actual analog of that same exact chart right here. So we can kind of see, right? We have prices where we're around the same range. We're talking 60K. The mvrv ratio is at 3.24, but where we are currently is 2.15 now currently. or we might have jumped up. Yep, no, we're at 2.6 currently because we're at 62K. So room for growth. And once more, what does the mvrv mean? It's the ratio between the market cap and the realized cap. So you take the market cap of Bitcoin, you look at the realized cap, which is the fair value or the realized price for Bitcoin, and you're going to get this ratio when you do that division there. So good stuff because it shows you market extremes and market lows, essentially. So great thing to monitor. Now, we're almost there. We getting through it. We got a lot to talk about. Many things that we could look at to corroborate my claim. I mean, it really depends on how detailed that y'all want to get. Like, I like this one in particular. Okay, so let's kind of read this panel on the side. So one thing that it says is the long-term holder realized price shows the cohort of their average, price through time. So that's going to be this light blue at the bottom. From there, we also have the bands. And so, hold on, I want to get this to show for us. So we have the bands. So we're going to have these lower bands saying, okay, here's like the range or the average for most of those guys. And so the long-term holders is key. Here's another little bit of game. The long-term holders, they like to start to take profit once they are up about 350% plus. Once you see that, this is when you start to see these green vertical bars saying, hey, like a good bit of these long-term holders are in profit about 3.5x. This is how you know you're in the fullness of the bull run, okay? And so this is very, very, very key to understand because, when we see that these guys are in profit, they're going to start to distribute their coins to the short-term holders. And so that's something that you need to know. And this kind of pinpoints now specifically the short-term holders in their behavior, where you only start to see the green flashing off when essentially they finally get to that first bit of euphoria. And as you can see, they experience much less euphoria of 300% gains or higher than the long-term holders. That's what I'm talking about. Like, we got to get in even before we see any of this stuff flashing off in the green. And then so because we see when the short-term holders are flashing off, it's very short, it's not a long time where they are even at a standpoint where they're above 350% in profit. And that's on Bitcoin in particular, but altcoins may be a higher multiple, but we'll use Bitcoin once again as a proxy. So the key thing to kind of keep in mind is, when the short-term holders are in this band of when they're, above their cost basis, a certain deviation, standard deviation, then we got to keep that in mind. That's in orange. And then when they start to really tap the red part of these bands, that's how you kind of know, yeah, things are starting to get a little overheated. So there's, plenty metrics. And then so in January 2021, we seen that things were getting overheated. And, if we want to take a look and say, okay, cool, let's see where we at now. So let's reset that zoom. So where we at now? Short-term holders, they're just now starting to touch this red band. And so we want to see this on a rolling 30-day basis. So that is, just letting us know that things are starting to get exciting and kick up. I want to actually go back and look at, okay, what was the time period and the price? Where were we at that first time the short-term holders start to touch that top of the red band? So let's go back to the last cycle. And as you can see, they spent some time getting up to it. But where did they touch it officially? It's just right around all-time high. I don't know if y'all can see that, right? The little box is getting in the way. The box with the numbers in the way. But right where my little cursor is just right above $20,000. And if y'all see that, that's when the short-term holder starts to get above that, that nice bit of euphoria, and they're starting to see some nice profits. They carry that on for a nice duration. We're talking 4 to 6 months, and then they get back very close to it later on in the cycle. Well, with that being said, it's another sentiment read kind of letting us know, okay, things are getting that much more, I would say, active for the short-term holders the moment BTC gets close or above its all-time high. And what generally happens is what? It went from 20K to, like I said, 70K. And so we see further upside from that point. So once again, if you're waiting, kind of like, I don't know what you're waiting for, you know, it's kind of one of those conversations. So a lot of good data with that. Now we can talk about the ETF and all the inflows. So same thing. Go ahead and give this guy James a follow. New record for Bitcoin. So the ETF trading volume is officially 7.69 billion. The previous record was just 4.6 billion from the launch day. So in one day, and we're talking about inflows and outflows, with Bitcoin, it's seen $7.6 billion just from TradFi. That's a factor that we didn't quite have in crypto before these ETFs. So this type of buy pressure, it does not seem like it's waning off. Like it's getting stronger. As you can see through the time, this thing is getting stronger. And so that's something to pay attention to. And we're going to keep monitoring to see how long can they start to eat up this shrinking supply, especially once we get to the halving. Because that supply is not going to accelerate in issuance. And so essentially that is going to be a bit of a supply shock. So, you know, just general economic supply and demand. If you have higher demand with less supply that they can have, that means the asset price goes up. Boom. So let's actually look at, I want to go back to look at this. So if we want to look at in short order, let's talk about the life cycle of what we've experienced. So we've seen major inflows for, you know, the beginning parts of the ETF. So, you know, and this is basically tracking the inflows for the day and the outflows, right? And so there's certain times where we were actually negative, but it was very brief, where we had more outflows than inflows during a duration. But as you can see, we've come back past negative, and majority of the time of what we're seeing, especially once we got into mid-February, we have very minimal outflows. You see how these outflows are getting smaller and smaller and smaller. So y'all can kind of see here, the outflows are getting smaller and smaller and smaller. You know, we have some days, and these are the weekends, by the way, where you don't see any bars, you know, because, you know, TradFi, they don't trade 24/7. But with that being said, you know, we see increasingly amount of inflows to the upside, and we see dwindling down outflows. And so that's why net, you know, we see Bitcoin having these nice days where, you know, we see these ETFs really starting to soak up a lot of Bitcoin and holding on to it. And they're not playing this for the short term, you guys. They are actually playing this for the long term. They're not traders. A lot of these institutions know what they're doing. So this is not them coming in today to try to sell next month. And we see days of where the net inflows are touching, you know, 500 million, you know, 300, 400 million in just one day. So, you know, we're going to get the data for tomorrow, and it's probably going to show, it's probably going to be close to, you know, 500 million plus. And because we've seen a huge, tremendous push that we went literally from like 58K to 64K all in the span of like 7-8 hours. It's pretty intense. So that's the volatility for crypto that we have. Now, with that being said, let's track who has the most Bitcoin within the ETFs. So we have Grayscale, and so they've been the only fund that has been pretty much dumping. All the other funds have been buying. And so we're going to get the data for today. But as of right now, and just talking about yesterday, BlackRock had a huge, a huge day, you know, where they basically inflowed 9,000 BTC. So do the multiple on that, you know, so multiply that by 60K. And so that's hundreds of millions of dollars that they bought in BTC, right? We're talking about Fidelity and ARK being number 3. Now, ARK is now going to make 4 institutions that have a total of, I think, $4 billion in Bitcoin. So obviously Grayscale, BlackRock, and Fidelity are the other 3. So that's pretty massive, y'all. Like, you know, this is that push that we've been seeing. But the beneficiary is all the altcoins, right? We've seen what Ethereum is doing because of this. Ethereum is scheduled to potentially have an ETF for itself. So imagine all these same companies or these same institutions, and these are the market makers. They are now going to be trying to push their investors into Ethereum. Like, come on now. Let it rock, let it ride. You know, this is going to be incredible for everybody that holds Ethereum currently. So get ahead of the trend. So, you know, that's kind of where we're at. And, you know, this is an incredible thing to witness. So if you want to look at it from a graph perspective, we had a time where we came out where, you know, Bitcoin was kind of like ho-hum. And we're trying to figure out, okay, what are these ETFs going to really do? And what do we find is that, you know, Grayscale sells off. We see the net capital change for, who's holding what within the ETF start to kind of dwindle down after that first week. But then we've just been on a tear. And especially, this past month, like February has been the month, y'all. Like this may be like, if we go check the monthly performance for Bitcoin in all of its years, this may be, if not the best February, it's in the top 3. Because I know for for the sake of looking at the percentage gain, we're above 30% gain for this month just for BTC. That's incredible, y'all. So good thing to see as we continue to trend higher with, a tremendous amount of Bitcoin being held by these ETFs. So yeah, if you're not feeling good, look at this chart and say, maybe I should participate. And we'll finish with this. Woof, woof, woof. Dog with hat. Man, oh man, this has been a great journey. I'm pretty public. Like in the Vaults of Crypto, we've been talking about this. I want to say probably for maybe close to a month. But the reason why I like this, like I said, I don't participate in memes often, but I do like something that has narrative. I do like something that people can have a good time with. This is reminding me of Shiba Inu, y'all. It's reminding me of Doge. And those are kind of played out, You always need to find that one meme coin that has ease of use to be able to get access to it on a chain that doesn't cost so much. And then so people can buy this on, I'm sure they can buy it on Central Exchange, but it's very easy to buy on the DEX. And then so here's the thing. Let's talk numbers, y'all, because that's what it's all about at the end of the day. Let's talk numbers. So under a duration, and this is why the meme coins are so dope in my opinion. Do you want to make your whole portfolio meme coins or even a large portfolio position a meme coin? The answer is heck no. But maybe a 5% allocation to your portfolio or a 1% allocation to your portfolio may be worth the hedge, right? And then so we're talking from December 8th of 2023. We're talking just a few months ago, not even like a year ago, to December 22nd. We seen something go bonkers. This thing legitimately did a 230x in 2 weeks. Now, I did like 3 consultations in this past 2 weeks. And when I was doing the consultations, this topic comes up. Hey, meme coins, blah, blah, blah. And so I address it. And I say, if you're going to do one meme coin, let it be a good one. And then so of my findings, there's probably like 4 that I would even entertain. But this probably being one of the ones that I would entertain. Dog with hat. You can get it on Solana. You can buy it on Radium. If you don't know how to do that, jump into the Vaults of Crypto. And we can definitely show you how to do that. But I told everybody, I was like, look, in this consultation, even if we had a half move, because guess what? We have a whole bull run ahead of us. And guess what? You know who likes to buy meme coins the most? Retail investors, right? So the people that like to get in late, they like to jump on the meme coins because it's just fun, it's easy, all that good stuff. So they're going to buy this. They're going to buy Dog with Hat. Now, if it can do this before the retail investors are here, do a 200 some next. Let's say, we're not talking about percentage, but let's say the excitement in the move, right? We just get a portion of that. So let's find the bars pattern. And let's say we just get half of that. Half of that. So let's just let's measure it from this move to this move. So let's get about half. Right about there. And I want to get to that portion there. If we just do half of that, right? And I was talking about from this point of where we came down and then we break out. If we just do half of that, and it doesn't have to happen in succession of like just rapidly like that, but I'm talking like we got time. Like time is on our side because the bull run is really, really like it's kicking up, but we ain't even at like the most exciting part yet. But let's say we got time. Let's say we're talking about we got a whole year to make some things shake. So we got a whole year for stuff to happen within crypto, if not a little bit more. So let's say instead of it just shoots straight up like that, it goes sideways, but it grinds up because as you can kind of see, it grinded up even as the rest of crypto was kind of just trying to figure out what's going on. And Bitcoin's pumping, but it's grinding up, higher lows, but things in meme land like to have huge candles like this, y'all. And then so let's say we only get to a standpoint of half of this move here. And that's the top of this bars pattern, but it takes us, a nice duration to do so. So let's say it takes us until 2025. I can wait. Can you? I can wait. Shoot. So with that being said, one thing that we can do is let's do a measurement. And this is, yes, this is speculation, but this is a very like reasonable, hold on, let me get this up. So this is like a very reasonable way to look at something, right? Because we did all that research talking about like, hey, you know, the people who are in this market, typically more long-term holders, short-term holders aren't in profit yet at this point in time. Like they are a little bit, but not quite. And then so let's say it takes us a long time to get to that level, but we do inevitably. So let's pull it up. So if you want to be able to lock in a nice and easy, like to me, this is an easy 10x, but you have to do something right now. So you ask yourself this question, and let's say it does take this amount of time till March, February 2025. For example, something that happened in a span of 2 weeks, we're given a year, and we're only taking half of that move, right? Not even the full thing. What are the probabilities of something like that happening? I think it's very high, because understanding who are the type of people that like to buy this stuff and the ease of use of being able to buy it. And essentially, you know, you ask yourself this: if you want to go ahead and buy yourself a car or get your daughter or your son, whatever, or something that might be meaningful, you want to go on a very, very nice vacation, you ask, okay, I have X amount of dollars in my pocket now. What if I 10x'd it? What could that buy me in the future? And mind you, let this be money that you don't care about. Like, you cannot care about this. This cannot be money that you're dependent on. Like, please, like, don't put money that you need for bills or, you know, your life to maintain itself. Like, this has to be money that you're like, you know, I'm probably going to spend this in the next 2 weeks on stuff that's never even going to benefit me really past 2 weeks. So that amount of money, whatever that may be, you do a 10 or 11x multiplier at minimum. And that's something that this is probably going to be able to get you. Just a little heads up. So it's on you. I've already got my allocation a couple months ago. And as of right now, it's been very fun because as of today, this thing has gone up. Let me see if we can zoom in so we can actually see that. Let me get that in frame. So this thing has gone up 31% today. Now, Bitcoin went up 10% to 12% in a day. This went up 31%. At its best, I think it was up like 60% in a day. Meme coins do that type of numbers. So why not? Why not put your $100, your $200 and act like you never did it and then check back a year later? You'll be surprised. You might be able to go on a vacation off that one decision. You might be able to get something for your kids or your mom or your dad or for yourself, whatever. Like, you might be able to swap that engine in your car that, you know, you've been wanting to do for the past 5 years, but somehow you just couldn't get together $5,000 or $10,000. This may be a way to do it. So I'll leave y'all with that. I digress. We've talked a lot. I didn't really answer too many questions, and so let's jump into some questions now. What y'all got for me? We talked a lot. Trying to give y'all the alpha so y'all can understand how this stuff works and how we're gonna get it done. How does this affect the next bull run? Will it give the hedge funds, big players to manipulate? Okay, so the question is, like, with the ETFs having a lot of inflows, how does this affect the next bull run? Yes, they will control the next bull run because they're going to own a good portion of it. But think about it. Grayscale already owned a lot of the Bitcoin. Like, they still sitting above 400,000 Bitcoin. And so if you do the multiplier on that, like, it's, you know, billions and billions of dollars. What if they do with it, right? How have we gone in this cycle? And because they really just held on to it. But then again, it wasn't quite an ETF. So there was a situation where they did have to hold it. So I think once the demand wanes down later in the cycle, we're going to see this asset class have less volatility to the downside and to the upside, because that's just not that's not the way that they like to do business, right? So if they're going to hold majority of the supply, this next bear market, I think we're not going to see like that 73% dip like how we seen this last cycle, just like how we didn't see like the 85% dip for the previous cycle before that. So, you know, the dips may be less dippy and the upsides may be less rocket ship, basically. And that's pretty much indicative of how these cycles have been going anyway. So, yeah, if we're not trying to get it done this cycle, we have another opportunity next cycle. It's just probably not going to be as great. You might have to kind of jump out on the risk scale, kind of what we're doing now with the altcoins for the next cycle as well. And so that's kind of how that's going to play into all this. So, yeah. Y'all have any questions? Is there, let's do, maybe we can, what time is it? Okay. So we've been doing this for like an hour and 6 minutes. Let's spend, I say, maybe 10 or 15 minutes on, let's do like 2 or 3 coin requests. So if there's a coin that y'all have interest in and we want to do a little TA on that, let's take a look. Put that in the chat, and I'll see if I can do my best to take a look. But if y'all have more meaningful questions, then we can do that instead. So another question, what impact do you think an Ethereum ETF will have on the current Bitcoin ETF? It will suck some of the liquidity from Bitcoin ETF, but I think there's a different risk appetite that some hedge funds and institutional players will have, and they'll go to ETF, but some of them be like, no, we're just good with BTC. So I think it will take a little bit from BTC, but not like a tremendous amount, if that makes sense. But nonetheless, it's going to bring new, fresh, TradFi capital to Ethereum. So, I mean, just like how we've seen Bitcoin shooting up like crazy, Ethereum has the opportunity to shoot up even faster because of smaller market cap. So, something to think about. Cool. All right, y'all. Get those coin requests in, and we'll take a look. If not, then we'll wrap it up. We'll come back next stream and keep chopping wood and carrying water through this bull run, and really just doing our thing. Let's see. Okay, so I see Stacks. Okay, yeah, Stacks has a layer 1. We can look at that from a TA standpoint. Boom, boom, boom. Okay, so cool. We got one, so I'm gonna rock with it. So let's take a look at Stacks really quick. So we'll go out of here. We got Stacks and Phantom. All right, so I'll take those 2. And I love Phantom. Y'all already know. So let's jump in. Let's see if we can get the chart for Stacks on TradingView. We should be able to. So Stacks. Okay, so nothing on TradingView. We'll have to look at it on Dex Screener then. That's all good. So Stacks. Let's see. Do we have it on TradingView? No bueno. All right, let's try CoinTrader.pro. All right, Stacks. We got that ticker, right? Stacks. Or you know what? Yeah, I want to say this should be it, right? Stacks protocol. Yeah, let's see. So let's compare that to the dollar, because it has been performing pretty good. I've been peeping it on CoinGecko. All right, let's see the data, the information. Nothing wants to show us Stacks today. Well, maybe I had this wrong. Let me double check. The ticker is it STX or STAX? If you don't mind, help me in the chat. Let's check CoinGecko, because I know I have seen it there. So Stacks. It must be STX then. Okay, so I see. I was spelling it wrong. Okay, so yeah, STX. I got it. Okay, so well, let's just look at it on CoinGecko first. It's at $3. A good amount of the supply is out. This is not a cycle 1 coin. We're looking at probably like what 4/5 of the supply is out, give or take. Over the past, let's look at the past 3 months. It's been in an uptrend. And yes, that's a nice uptrend. So essentially in the past 3 months, it has went from 70 cents to $3. So that's nice. That's nice. That's more than double for sure. Okay. So yeah, okay. Let me go back to trading view and let me see if I can get it, because now I see. So STX instead. STX. All right, yeah, there we go. So let's see which one is going to show for us. Let's go with this one. Binance normally has a good chart. Okay, cool. So this is the monthly chart. Great month for stacks this far. Let's get that in frame. So the month for stacks has been pretty dang good. I mean, nice for an altcoin. It's already made its round trip, so it's done a 100% retracement, very similar to Bitcoin. Now, the reason why stacks, and so okay, I'll talk about stacks real quick. The reason why stacks is very nice is because it is giving exposed, like, so for Bitcoin is being able to build on top of Bitcoin to be able to have some type of dApps and some type of decentralization usage, where people can operate with things on the Bitcoin chain and they don't have to be dealing with just only centralized exchanges, So they're building on top of Bitcoin, which is nice. And it's going to probably reflect very similar price movement as Bitcoin because that correlation. So, obviously this is going to trade at a higher beta, basically a higher percentage on the way up, simply because this market cap is less than Bitcoin's. So from 2023, see if we can get a price measurement really quick. So from low to high, yes, it has done 13x. Bitcoin has only done what, 250%. So it is outperforming like 4.5 to 1 or 5 to 1. That's nice. It's very, very hard to say where this thing is gonna go. Simply just because, the use case of something can increase as cycles go on. Like this last cycle, overall in total, and even if you want to get that wick, it did a 60x, right? If you're not including the wick, you're only talking, let's not include the wicks. You're only talking to 30x. So, we're already halfway there. Now, I would venture to say, we should just look at this, say, hey, what is the usage of this thing? How many dApps has it already created? And try to project out, if the runway is going to continue at the pace of what it's been doing. As of right now, from a standpoint, it's tracked pretty dang well because, well, let's just look at the lull period let's try to see if we can get Ethereum up on here and see how does that stack up in momentum versus Ethereum, for example. And so let's see, let's put that on a log scale. So stacks, if we want to look at it versus Ethereum, it's kind of like the same thing where, you're going to have your coins that start to pop off first, right? But the key thing is, okay, so Ethereum in orange, right, has bear market, so the stacks. Ethereum pops back up right here in orange. Stacks still goes ahead and continues to dump while Ethereum maintains price. And so sometimes you may ask yourself, well, dang, like how can something have like way more percentage than something else at the same point in the cycle? Simply because since this had less dump, it's going to have less upside and still be relatively in the same position in its chart. This is a little bit more bullish in its chart, getting back to its all-time high, but it had way more dump. And then so I really want to kind of look at this lull period while we had this lull period for stacks from, beginning of 2023 all the way till October. But the last, 5 months for stacks has been incredibly bullish, especially the last 3. So 2 of the last 3. So, same thing as Bitcoin or anything that's in price discovery. Typically, you are going to see some upside. Now, it's not as great, obviously, as the people who knew about this down here. But then that's when you have to look at your portfolio and say, hey, is this the best option for me? This is probably going to be a little bit more stability, less risk, simply because it is going into price discovery and it's already done a cycle. So I would say this is going to be a lower risk play to the upside. Let's kind of see a couple things here. So outside of that, let's see what does the Hatter say, and we'll put this on a daily chart. So the Heikin-Ashi trend reversal, what can we see? The best opportunity to buy obviously was back here in October and the months preceding. We've been getting sell signals, or basically, hey, don't buy signals from here because it's been really bullish. Let's see on a 12-hour, has there been any opportunities? That last little opportunity to like kind of DCA at a fair value probably would have been here. So when we interacted with the 100-day moving average at like a $1.30 to $1.50. Now, ideally for your entry point, you want to get in. So we have the 12-hour chart, so that's going to give us a little bit more data. I wouldn't really want to use the Hatter too tight of a time frame, shorter than 12 hours. And then through the bear or the bull, we're going to have opportunities of where this is going to interact with the 100-day moving average. But I would say this is a good look simply because Bitcoin is still the narrative, and Bitcoin still has, as we can see from all the data, still has a push for it. So the stacks, essentially, since the correlation is going to be so high. And so I would say this is like getting Bitcoin, but at a higher beta to the upside. So, I'm not opposed to stacks, but it's definitely, if you want to look at the fear and greed index for this, like this thing is definitely going to be on the greed side. So let's look at the fear and greed. And yeah, this is at a more greedy point in the market for it. So essentially, what I always suggest, if you have a nice amount of interest in it, take your allocation today. Why wait? Because like I say, things can continue to just go up. Maybe 25% of what you think you may want to put into it over the next 2 to 3 months, right? But then ideally you would want to be able to get another DCA in, or maybe a more fair value DCA in when the greed is somewhere below 50. So we're at 80 for this asset, and we ideally would like to see it below 50, closer to 30 if that. And so, yeah, and obviously, when we have all of this basin, we're at the low greed of like 5 and, 8 and 10 and all that kind of stuff. And that's when you could have really got some good DCAs. And y'all can see that, especially with the Hatter showing you all of that good information out here for all these buy opportunities. So Stacks looks pretty good. It's very bullish and it's breaking out past all-time highs. Yeah, there's going to be some upside, but it may be very limited compared to some other altcoins, but safer, if that makes sense. We'll go to Phantom real quick. So Phantom, and I already got this one on the watch list, so let's dive in there. 47 cents. We did have a buy signal recently for Phantom. And we're talking, early February. So just a few weeks ago, we're, same thing. I was kind of, telling guys in the group, Phantom. I did like a few consultations during this time. So I know some of the people in the Bolster Crypto were able to scoot Phantom below like 35 cents. Now we're kind of back testing like that 45 to 50 cent range. The biggest point of where I'm trying to tell people, hey, you really want to load up on your Phantom before we break out past its previous local high at 62 cents, but indefinitely before we get to $1. We get to $1, it's only just a 3x till we get to its all-time high of about like $3 and some change. And then so this also is a layer 1 that has use case that a lot of people will be using, and its speed is improving through time. And so the price finality on Phantom is really good. It's literally the first EVN, and we will find this trek up and through these these waves of liquidity to the upside. And my projection for Phantom, this cycle on the bear side has always been getting back to its all-time high, but to the upside I see Phantom getting up to like 10 to 12 bucks. So we're at now at 47 cents. Go ahead and lock in that 10x once we get to the all-time high. But especially if we get to 10 bucks, this is like a layer 1 coin that it's a very, very when it comes to risk management, this is going to be on the lower risk side as well, and we'll find this potentially being able to give us a nice 20 banger or 30 banger. We'll find out and see. But as far as how much has it retraced, and we still find that it hasn't retraced even to its golden ratio yet, which means you're still on sides versus the average investor. Like we're not even above the golden ratio. The golden ratio is at like golden ratio is at $1. So if you're investing in the Phantom before $1, you'll be on sides. If you're investing after that, you'll be off sides basically. And this is at a lower risk level than Stacks, for example. So this is only at like 67. So I would say this is a little bit a better fair value buy with very similar potential upside for example. So looking pretty good. Let's look at a couple things here. So I do want to look at the Bollinger Bands really quickly. And so if we want to look at the Bollinger Bands for Phantom, and this is on the daily. I want to look at the daily, then we'll look at the weekly. So for Phantom, we're pressing on the upper bound of these Bollinger Bands. Typically, those DCA points would be when we're at least touching the mid band in orange. And so there may be cause for potential, especially if Bitcoin decides to chill out. Even if Bitcoin chills out, the altcoins are going to be dumping. Not a crazy amount, but they'll rescind some of these price increases. And then so, I'm going to venture to say we may see a little bit more stagnation because we had an incredible last 2 days for maybe like the next 3 or 4 days. So on Phantom, I'd look at this over the next like 3 or 4 days before I decide to do anything. Because I don't think this is going to be taken off in extreme fashion. Because simply, and I felt it, especially watching this morning, it got sold off really quick. I remember seeing it get to like 50 cents, but that got sold off really quick. And so we have these wicks to the upside. That's not, the most inspiring thing, especially as we would anticipate this to kind of slow down. So, Phantom's still a really good buy in the long term because, we're not even at $1. So I like Phantom. Let's see. Cool. Okay. Well, yeah, I'm gonna leave it there, y'all. So quick little basic TA. We got a lot of things popping off. Get in the game. There's plenty of coins out there to research. I have a whole list of coins that are like the preferred coins that you definitely want to consider having in your portfolio. That's only for Avulsa Crypto members. We are getting stronger by the day. And then so definitely jump on in and get a part of this alpha group, man. We're doing the right thing. So I appreciate y'all's time. Once again, we find ourselves ascending in the right direction in our knowledge. And that's what it's all about. The more that you know, the more confident that you can be. And the more confident that you can be, the more action that you take. The more action that you take, the more benefits that you get out of life. That's just facts, So yeah, enjoy y'all's night, y'all's day, wherever you're at. And we'll continue on with these streams and, experiencing these pumps. The altcoins are on the way. So stay tuned. I'll catch y'all later.